traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and I want to welcome you all back. And we're going to go ahead and get started. Joe asks, "Good morning, Blake. How do you stay always mentally alert even when you're tired? Do you exercise before trading?" No, I don't exercise before trading. I exercise in the afternoon, but no, I don't. I think what it is, Joe, is just good coffee in the morning. I don't, I don't know how it is. I don't, after I rest, as soon as I get up, I'm always mentally, fine. That doesn't mean uh, that doesn't necessarily mean that uh, that I'm not physically tired, because most times I'm just physically tired, but mentally, usually pretty alert. So, and I can hold it together for the most part, but I don't know. I don't know. I'm a morning person. Maybe that's another thing. I'm a morning person, and I'm at my best in the morning, because usually in the afternoon I'm pretty much stick a fork in me. So, especially after last night. Last night I did a scrimmage against the kids, soccer, uh, and man, my body is hurting today. It's going to be really sore today. These kids had me running around like crazy. We're running up and down a full-size field too, so I'm tired physically. All right, let's go to the euro. So, okay, so we know where we're at. Same story as yesterday. Nothing's really changed. The thing that I guess we should realize here is that instead of holding up at the 38% retracement, let's go over to the hourly chart. Instead of holding up at the 30% retracement, 38% retracement, we got held up at the 50% retracement. Okay, so that 50% retracement was resistance, and it ended up holding us as resistance. Okay, that means that's going to be extremely important resistance today on the way back up. Okay, so that comes in at 112, 10 basically. And I shorted the euro yesterday above 112 a couple of different times, made a little bit of money, but didn't ride it all the way down here. Okay, but now we have to imagine that we take out the one, if on a strong number we take out 111.30, but the real important support here for today, and not talking like longer term structure, I'm talking today, is going to be right down here, 110.90. Okay, that's important support. Okay, so if you notice this here, we are again, talk about how the market tends to go mid-range ahead of like a key data point. So if this is the upper end of the range right here at 112, this is the lower end of the range at 111. We're pretty much in the middle, okay, between the 112 area and the 111 or 110.90. Okay, that's what we're doing, is we're finding ourselves more neutralized ahead of the number. So the good news is we know where support 110.90, major support for today, resistance 112.10. It's going to be key resistance for today, because if we can break either one, I mean, if we break above 112.10, that's going to unlock a move back up towards the high, 112s, maybe even 113 next week. We break below 111 or 110.90, that exposes a move to 110, which is major support going into next week. So, a breach above or below that support or resistance is going to, like I said, it's going to unleash a little bit bigger of a move following in the next few days. Okay. Let's go over to the cable. Okay, so here's the pound dollar. Now, the cable as you guys know, it stops short of this 150.90 level. But the reason why this is such important support, 150.90, is because it is the 618, on a weekly basis, on a daily, the low to high 618 retracement comes in at 150.90. It's huge support today. 150.90. It's huge. Whoops. If it breaks, that's going to be really bad for if you're bullish the pound. Really, it's really, going to be quite a disaster. Okay. Because I would think that we head into the 140s following a move below, 150. 150, 150, 90. I assume we're heading back down to 148 to 146, somewhere down in this neighborhood. Okay. In the next couple of weeks. Okay. Now, resistance, because we are holding, mind you. So resistance now, you see how we're just continuing to make these lower highs. Really, to break the cycle, I mean, we have to break above 180, 150, but I'm gonna actually say that all the way up here to like 152.10 or so, that this spike high right there, that we have to start breaking above that to take any of this downside pressure off, in my opinion. Okay, so I'm gonna write down 152, and what's the high there? 152.12. So I'll write down 152.10. Okay. We're in a range, but as I told you guys all this week, we're threatening to go from range environment to a bearish environment. We're just at the lower end of the range right now. Okay. But if we break through this support, we're likely to be kind of bearish near term. You also have to imagine that any rally back up here, even above 152 and change, if we get a rally back to like 153 going into early next week, I'll probably end up being a seller up there, finding some sort of fib from, like let's say we break higher. I may not short it today, but next week look for a move back up to 153 and be a seller up there at the 38% retracement. Okay. Let's go over to, that was the pound. Let's go over to the Swissy. Now, as you guys know, Swissy, 98.40, key resistance, period, end of story. Because that 98.40, here's your daily trend line. You guys know it's not only a daily trend line, okay, but it's also a, monthly, weekly, whatever you want to call it, from 2001 that comes down to 98, or basically right where we're at, 98 and change. So a move above 98.40 would be ginormous. It'd be like one step closer to breaking parity. And I think, as I've said for the last few months, it's more of an eventuality than anything. It's just, taking a sweet ass time doing it. But, it's getting close. So my only dollar exposure is the dollar Swiss, and obviously, I'll be rooting for a strong dollar number as a result of that. Now, support. I don't think anything's really changed here. Support's going to be at 97. So if we do get a weak jobs report, there's probably going to be buyers down here at 97. They've been down here for the last, week and a half, and they just show up anywhere down here. So 97. It's one of those things, like I said earlier this morning, if you have a weak jobs report, well, how weak is it? I mean, if it's not that weak, you're probably going to have dollar buyers stepping in, even after the dollar slumps a little bit. Because think about the Fed and think about the broad brushstrokes that the Fed, is looking at. Okay, as long as it's not a disastrous number, there's going to be dollar buyers down there. Obviously, the dollar Swiss is threatening to turn into a bullish environment if we break above 98.40. This is not only one asterisk, I would put even two asterisks. That's how important it is. Dollar yen. The dollar yen, eh, we're getting up towards resistance right now, which is 120 and a quarter, I think is what we wrote down as resistance yesterday, but it's the spike high here. 120.35. Um, Still trying to think symmetry here as far as a triangle goes, but can we, on a really strong number, can we spike all the way up to 121? I guess it's possible. Um, I will tell you that this is probably key support today is 119.50. So let's just write that down. Resistance for the dollar yen. I mean, we're brushing up against it here, but let's just imagine we get a strong number. I mean, that we have to go on the basis that we are going to get in either a strong number or a weak number. So where are we going to go from here? So on a strong number, 120.80 would be very possible, maybe even up to 121, but I would say 120.80. Okay. It dipped down to 119.50. Okay. So 120.80. And we're in a range, but remember this is the one currency pair, the dollar currency pairs that would threaten to turn back into a bearish trend following that that bearish breakdown from a couple of weeks back or from several weeks ago. Okay, let's go over to the dollar Canadian. Whoops, went the wrong way. Okay, here's the dollar Canadian. Now the dollar Canadian stopped at 50% retracement, but I'll tell you guys, the Canadian currency looks pretty strong. What's the most interesting thing about the Canadian right now is that despite the weaker crude prices, the Canadian is still staying strong, which everybody here, at least if you listen in normally, that the monthly rejection at the 618 was a big deal. We rejected there. We came within 20 pips of that. As I had mentioned to you at that stage, at that point, that we would pull back from that 134.50 level. The question is, how far are we going to pull back here? And I mean, I personally would buy a dip down to 130, but we're nowhere near that right now. And if you look at the low to the high, we're at a 50% retracement. The 618 comes in at 131.80. That may provide us some support for today. You have your, here, let's do this. You have horizontal support right through there at 131.76. 618 comes in at 131.82. So really the 618 retracement, I think, should find some support today. But overall, I will have to say this again, the Canadian currency is looking really strong. It's not just against the dollar Canadian. I mean, you saw the big rejection of the euro Canadian earlier this week. Pound Canadian looked weak, still looks weak. Break below 2. Pound Canadian has 1,000 pip move under its belt, potentially. So if you're long the dollar Canadian, think about that. Don't just think about the dollar Canadian here. Think about, here's that pound Canadian. Well, yes, we do have this big head and shoulder pattern. Well, yes, it does point 1,000 pips lower. We have the Euro Canadian, big rejection this week above those highs. And, I mean, look at this was because of Greece. So I don't know if we really want to even count that, but I mean, look at the Euro Canadian here. It looks vulnerable. That could mean, I mean, if you think about that, I mean, the euro dollar breaks down below, you know, below 111, the cable breaks below 151, and the dollar Canadian doesn't go anywhere. Well, that means that the euro Canadian, pound Canadian, they, you know, they're breaking lower. So just if you're shorting Canadian currency, just realize that the Canadian's quite strong, and it's strong against a lot of different things at the moment. Okay, so anyway, um, going back to the dollar Canadian, support for today should be around 131.75. Resistance, I mean, I assume it's going to be right way back up here at 133.75. I don't know if that's too um, ambitious for today. You know what I mean? Well, this previous support comes in just above 133. That you can see right through here. Here, let me grab this red line rather than draw a new one. Low, spike low, spike low, spike low, spike high. That comes in just above 133. So let's just call it 133.10 as being some resistance. Um, we're still in a bullish trend, um, but we just have to be careful with it. Okay, let's look at the Kiwi. So the Kiwi rejected at 164.50. Um, if you take the daily trend line, we popped out of the daily trend line that first day. On Wednesday, gave us a nice, healthy move higher. But it's really the gains have been limited, and as you guys know from yesterday, this 64.50 ended up being resistance, right up here. But really any move up to 64.65 is going to be a little bit of a struggle. I think that the Kiwi dollar's gone to more of a range now, but 64.65 will be upper resistance. We've gone from a bearish trend to a range, which is, like I said, it's first time in quite some time. Support for the Kiwi this was trendline support I drew yesterday. I thought we might get down there, but we didn't. The pullbacks have been very minimal. Um, I mean, any move back down here to 63.50, I'm sure will be fairly well supported. Let's write that down. Even if we have a strong jobs number, so 63.50 will be support. Let's go take a look at the Aussie. All right, so here's the Aussie dollar. Aussie's really obviously very choppy. One thing that I mean, I'm sure I'm as shocked as a lot of other, Aussie traders is, yesterday we had this double bottom. This is, boom, boom, finally breaking higher. Thought we'd, a dip to 70.50, 70.40 would offer a nice little bounce area. And we didn't even stop there. We slumped right below that. And yesterday during the lunch money webinar, I'm like, man, that is not good. The Aussie should have bounced. I mean, it should have found some sort of support down there, and it didn't. Now, but as you can see, the Aussie's super. I mean, look how messy it is now. I frankly, I don't know what to do with it. I assume that any strong U.S. data, a dip down to 69.50 is going to be very well supported. And where's resistance at? I mean, I'm not really too sure from here. If we get a rally back to 71 cents, that's a 50% retracement. So 69.50, 71.10, and then you got some previous support over here. I guess that should hold us up, but it looks really messy, and I don't even know what to do with the Aussie at the moment, which means that I'm going to end up doing nothing with the Aussie. Okay, so 69.50 is support, and that's obviously really key support, by the way, if we get down there. Resistance 71.10, and we're in range. So there you go. Now the dollar index, I'm just going to do that really quick. Here's the dollar index, and that's the daily chart. Let's go over to a 4-hour, and we are pretty tight trading range, you can see here. So the breakout points are 96.65, and 96, what's the low here? 96.09, so 96.10. We're wound up tight, guys. Wound up really tight. Okay. All right, so there's your bias chart. I still will do